Today I'll be talking about Google stock, why I will continue to be buying after their great quarter they just had. Their earnings were reported, they did fantastic. And I also want to talk about the signals that they're sending to the rest of the AI sector right now. So, with earnings just being reported, Google stock is up over 14%, beating analyst estimates by over $2 billion. This was such a groundbreaking quarter for Google. More than just this, I'll explain in depth later, but overall, this was just such a crazy reported earnings because we could see just how consistent they've been. So here's a nice little consolidation of all the revenue that Google is bringing in. So investors were having a little bit of concern with the Google search advertising just because of AI now, and the search bar is being lesser and lesser used. But overall, in terms of, they did actually pretty well with up 12% year over year. And then everything else besides that, Google Cloud did really great. And just in general, they're handling so many different services very well with increased earnings. Google AI Overviews, which is like when you search up in the Google search bar, it provides like a little AI context instead of just links, which has actually been really helpful for me in terms of like my studying. And I can't imagine that other users aren't taking advantage of this well. And we can see this in the numbers here with Google AI Overviews having over 2 billion monthly users. If we're looking at Burbank Capital here, they said Q2 of 2025 has over 450 monthly active users on Gemini, which is like their actual AI. It is ChatGPT's competitor. But even with all this good stuff that's going on, Google still trades at a 24 PE ratio. And I find that absolutely crazy because among all these big tech stocks, this is by far the cheapest. And I even think that even after this, we're up 3% after earnings. But I still think it's a good price to buy at. Anything under 200 is still, I claim, to be a discount. I mean, if you just look at this bar chart here, you could clearly see that Google in the past 10 years or so has been so consecutive in their growth. And obviously, there's been little volatility. But in terms of a company that is so big with so many services offered, they stayed very, very consistent in their growth. But what do I take from that? I feel like I take the fact that this is a safe company to invest in, and it is something that I can get behind, not only for the price, but because any company can be cheap, but not every company can be consistent. So Google's seeing a lot more demand in their cloud business, and it makes sense that they'd want to invest more into AI infrastructure. And with that being said, you could see here Google has increased their capital expenditures by $10 billion. And the interesting thing about this is that this is not just affecting Google, this is affecting other companies in which Google is reliant on, such as NVIDIA, in terms of like their chips. And this also affects AMD because they are also chip makers. And so this is just a good example of how demand for a market affects other companies in the exact same sector. And I think that's so cool. I know that the market's still at an all-time high, but Google is separate from all these other tech stocks in my opinion, and I just can't seem to find a reason to not buy this right now at these prices. At one point it was over $200 and that wasn't even at its best performance. So I just think that there is so much more growth to come, especially with the birth of AI.